Joining us, Barb Doran from BD8 Capital Partners and Richard Bernstein from Richard Bernstein Advisors. Guys, welcome. Rich, the NASDAQ, WCLD, and SOX had particularly bad sessions. The NASDAQ was down 2%. That cloud index and semiconductor index down 3.5%. Is this a signal maybe that there's been too much focus on a certain kind of stock?
So, John, I think you guys are pretty well aware that we have described the stock market as a seesaw, right? And on one side of the seesaw, you had tech, innovation, disruption, cryptocurrencies, all the sexy stuff. And on the other side of the seesaw, you had virtually everything else in the world. And I think today is a perfect example of that, where the seesaw kind of sawed instead of seed. I'm not quite sure what the right way to say that is. And we saw it go in the other direction. So you had a lot of stocks up, but NASDAQ was down.
So, Barb, we had utilities, energy, healthcare doing pretty well today in the S&P. Is that a signal maybe that some are selling winners and rotating? Would you be doing the same?
There's two questions there. Yes, I think that is what's happening, because when you've had such a monster run, I mean, the NASDAQ is up now 35+% year to date, and it's been driven by the names we're all very familiar with and the high tech, the big growth names. So I think it's pretty normal to take some profit taking here and then look for the laggers, look for the value names, small cap. And that's why I think you've had the Dow up 9 days in a row. But do I think the tech trade and the growth trade is over? No, but I do think there's going to be a bit of a pullback here. So I'm not chasing it. I own names like Walmart or the MasterCards of the world already, but I'm sticking with my growth trade on any pullbacks where, for instance, Netflix this morning, I think there's a buying opportunity over the next day or two. So I think we're going to continue to get opportunities in names like that.
Rich, let's go back out to you on this one. So whether you're looking at transportation or maybe you're looking at other areas farther afield like Europe, where do you see opportunities outside of these 7 stocks that everybody keeps talking about over and over again?
Right. So John, if you think about 2022, you saw the seesaw go in the other direction, right? 2021, we see tech, innovation, disruption, all the sexy stuff outperforms. 2022, seesaw goes back in the other direction. But what most people don't realize is that in 2022, 70% of non-U.S. markets outperform the United States. So when I said before that everything else in the world is on the other side of that seesaw, I think that's true. And when you invest in Europe, you have to realize that the United States is very much alone, and that we are so dominated by tech, by consumer discretionary, and by communications that other developed markets are not so similarly concentrated. So if these other sectors start to balance out, you should expect non-U.S. probably to do better than U.S. simply because of the sector concentrations. That being said, European earnings growth as you go 2023 towards 2024 is actually supposed to be superior than the U.S. tech sectors. So my guess is nobody knows that one, but that's actually true.
Interesting. Barbara, I do want to get your thoughts. We just reported the CSX results. We've got Knight Swift, which is one of the largest truckers in the U.S., expected to have those results cross here any moment, too. When you see the transports hitting fresh 52-week highs in recent trading sessions, is it still an economic barometer the way it once was?
I think it probably is. I think you watched JB Hunt 2 days ago, they missed earnings and they missed revenue. The management talked about starting to see some green shoots in terms of it possibly being a cycle low. And that's the question for them, for CSX, for Knight Swift. Is this the trough? Is this the turn in terms of cyclicality? So when each of these companies report, it's not even going to be so much about, what they've reported, because that is the past, but what the managements are seeing in terms of green shoots, because that's the question. Is this trough earnings for that, in which case you could see the cycle turning, and it could bode well for cyclical stocks in general. But that's a big question. We're not seeing a lot of those green shoots, so we'll be watching and listening closely.
Yeah, Rich, I just want to pick up on what you had to say about investing in Europe right now. I feel like we've heard this type of take in the past, and the U.S. does tend to, historically, typically, at least in recent years, outperform Europe no matter what the fundamentals might suggest. Why do you think this is different?
So Morgan, you're right. I mean, people have been saying that Europe is cheap forever and a day. And I don't think there's any value added in saying that Europe's cheap. It is cheap, but I don't think there's anything insightful to say about that. But what you've got now for the first time in recent memory is you've got earnings growth that is starting to accelerate relative to other parts of the world and certainly relative to the big leadership here in the United States. I think that's something different. So having something that's cheap is fine, but you want the fundamentals to improve. And if the fundamentals don't improve, the asset just gets cheaper and cheaper and cheaper. What you've got in Europe now is that cheap valuation with some, as you like to say, green shoots, that the earnings growth is actually starting to turn up and will be superior.